All right, let's talk about Arthur J. Gallagher Co. We're going to unpack their latest quarterly results, and it's a really interesting one. Think of it like the latest chapter in their story. We're talking massive growth, some absolutely huge acquisitions, and, a few little surprises hiding just under the surface. So yeah, let's get right into it.
This past quarter for Gallagher was really a tale of two different stories. At first glance, the numbers seem to be pulling in opposite directions, which means we've got to look a little closer to figure out what's really going on.
Okay, so here's the central puzzle. On one side, you've got a win. They beat their profit goals, coming in at $2.38 per share. Nice. But then you look at the other side, and they actually missed their revenue target by almost $50 million. So what gives? How do you beat on profit but miss on revenue? Well, that's the kind of thing that tells you there's more to the story.
But see, that revenue miss is kind of misleading because it hides the most important number on the screen, plus 33.9%. So while, yeah, they fell short of the Wall Street estimate, their actual growth compared to last year was gigantic. This isn't a story about weakness. It's a story of absolutely incredible growth that just didn't quite hit an almost impossibly high bar.
So, the big question is, how does a company possibly pull off almost 34% growth in a single quarter? Well, it all comes down to their core strategy. It's built on what you can think of as two powerful engines.
Their whole approach is actually pretty simple, but it's just incredibly effective. See, they don't put all their eggs in one basket. They're firing on two cylinders at all times, growing the business they already have and going out and buying new growth.
So that first engine is what we call organic growth. Just think of this as their foundation, their day-in, day-out work of winning new clients and selling more to the ones they already have. And they posted a really solid 5% organic growth this quarter. That's the steady, reliable horsepower that just keeps the company moving forward. But this second engine is where the real fireworks come from. It's mergers and acquisitions, M&A. This is how they add rocket fuel to their growth, by just going out and buying other companies to instantly get new talent, new expertise, and a bigger piece of the market pie.
And believe me, that M&A engine was running at full throttle. It's the biggest story for Gallagher right now, and it all centers on one massive, absolutely game-changing deal, the acquisition of AssuredPartners.
And just to give you a sense of the scale here, think about this. In 2025 alone, the companies that Gallagher bought bring in a combined $3.5 billion in revenue every year. That is a massive injection of growth, and AssuredPartners is the crown jewel of that effort. Now, what's really crucial here is that it's not just about buying a company. You have to make it part of your own. And they are crushing it. The integration is actually ahead of schedule. Their back office systems are up and running, the U.S. side of the business is already rebranded, and they're on track to hit all their financial goals. I mean, this is textbook execution of a huge deal.
Okay, so we've seen Gallagher's internal strategies firing on all cylinders. But what about the world outside? How are they handling the market? Well, they're basically operating in what you could call a split market right now.
Things in the insurance world are a little weird at the moment. On one hand, you have property insurance, where premiums for renewals were actually down about 5%. But on the other hand, you've got casualty insurance, where premiums were up anywhere from 5 to 7%. So Gallagher has to be smart, right? They're navigating these opposing currents, pushing for growth where prices are up, and managing things carefully where they're down.
So how do they manage all this complexity? Well, if you ask the CEO, Pat Gallagher, he points to something that isn't on a spreadsheet. He says, frankly, our culture is unstoppable. That is the Gallagher way. For them, it's this deep belief in their company culture that they see as their ultimate secret weapon. It's the glue holding that whole two-engine strategy together.
Okay, so that brings us to the big question. What's next? They had a strong quarter, for sure. So let's take a look at what the road ahead in 2026 might look like.
First up, let's check on that internal engine, organic growth. For the full year of 2025, they hit a strong 6%. And looking ahead, they're forecasting another really solid year at around 5.5% for 2026. That tells you they're very confident in their core day-to-day business.
And that other engine, the M&A one? Oh, it is not slowing down one bit. Their pipeline right now is just completely stacked. We're talking over 40 potential deals in the works, and those deals represent another $350 million in revenue. So yeah, that acquisition machine is still humming along.
And then we get to this. This right here is the showstopper. Gallagher is sitting on a potential $10 billion war chest for future acquisitions. Just let that sink in. That is an absolutely incredible amount of firepower they can use to keep buying and building, and they can do it without having to issue new stock. That gives them so much power and flexibility. Which really brings us to the final thought here. When you have a $10 billion war chest and a culture that you truly believe is unstoppable, the question isn't if you're going to make another big move. The real question is, what's it going to be, and just how big will they go next? That is a very powerful place to be.